Shanker, lovely to have you on the show this morning. Thank you for your time on a Sunday. Why hasn't the economy sort of fought back a little bit more since Trump put that 90-day pause on last week? We've still got the stock market looking pretty shaky.
Yeah, I think first of all, I don't think Trump is particularly concerned about the stock market. I think he is concerned about the Treasury market and the 10-year Treasury yield, which is rising. You know, it's not rising massively, but it is rising. I think the pause was caused not only by the what's happening in the markets, but also because if you look, contextually at this, what's happened is he's put a tariff on. If you remember, he waived this book at the time. The book was the National Trade Estimate. This is the book he waived from the presidential podium and said it made for very sad reading. And in many ways it does, because the barriers that he's talked about that other countries impose on US companies have not changed over the last 30 years. In fact, if anything, they've increased. So what's happened here is that he's basically said, look, if you want to lower these tariffs, then look at this book, look at these entries. If you're China, look at the 45 pages of barriers that are listed here. If you're the European Union, look at the 33 pages of barriers that you have here, that we've argued with you, we've tried to get you to change for the last 30 years and you haven't. That's our opening bid. If you come to the table, we'll start talking. And I think 70 countries have come to the table. And I think what some of those countries probably said, particularly Japan and Korea, is, look, we've got a very big tariff here that's about to apply. We genuinely are at the table this time. You might argue 30 years too late, but we are at the table. Please take the tariff take the gun off the table, so that we can negotiate. Interestingly, these negotiations will take some time. As you get closer to that 90-day period, I think you're going to find those countries will feel extra pressure to negotiate. So Donald Trump is very good at doing deals. He understands how to use time, and time will work in his advantage as you get closer and closer to that time when the tariff pause is lifted and the tariffs go back into place.
So really, that 90-day pause is a deadline for a deal rather than us facing the prospect of them being retabled.
Yeah, I think what's going to happen here is he's essentially got countries to come to the table. I think with regard to the UK, and one of the concerns I would have for the UK is, Scott Bessent, who's leading this, is not, he's not talking about the UK. He's talking about Japan. He's talking about Korea. Yeah. He's talking about India. He's talking about these other countries. So I would be, if I was the UK, making sure that I was looking at my entry and I was not doing anything that damaged the negotiations, such as, for example, dynamically aligning to European regulation, or as Spain is doing, courting the Chinese. That would not be a good idea. And I think what will happen is signals from the White House, one hopes, will get clearer. I think part of the reason the bond market is reacting the way it is because signals from the White House have not been very clear. Scott Bessent appears to be leading this now, with Jameson Greer, the USTR, as advising on the barriers. His signals are actually quite clear. I think the president's signals are quite clear. Some of the other advisors have not been very clear. They've talked about, we're not going to negotiate these tariffs. Clearly, the administration is negotiating these tariffs, including the 10% minimum tariff that every country now faces. The president has said that tariff can go as well in the negotiation.
Whether we're at the front or the back of the queue for a trade deal, Shanker, this talk that we've heard from former Chancellor Jeremy Hunt and others about us trying to turn ourselves into Singapore on sea, I mean, how credible is that? Is that what we should be doing? I knew you were an advocate for this kind of approach when we were all campaigning for Leave and Remain back in the day.
Yeah, well, I mean, the interesting thing here is that most of the barriers that the US administration is concerned about are regulatory barriers. They're not, I mean, I think tariffs gets all the media attention, but actually, if you look at these entries, most of those 33 pages in the case of the EU, it's all regulatory barriers. It's particularly in the case of the EU, regulatory barriers in the area of agricultural trade. So unless you're prepared to change those, unless you're prepared to improve those, you're not going to get a deal. But the good thing, the win-win here is that improving your own regulatory system, making it more pro-competitive, is good for your own economy anyway. So it's the kind of thing you should be doing, and arguably, one would say with the UK, we could have been doing for the last several years, is to actually remove a lot of these restraints and regulatory barriers that the US has been complaining of. It's going to benefit our own economy, first of all, and certainly it will help the relationship with the US as well. So maybe this is the extra, drive, the incentive that we need. And what the president is also saying is he's prepared to do in the US what he's asking every other country to do. There was an executive order on April the 9th, which essentially said to all department agency heads, I want to eliminate all anti-competitive regulations in the US. So, there are lots of anti-competitive regulations in the US, just as there are around the world, and he's prepared to remove those in the US. And I think if we can do those things and communicate to the US that we're willing to improve our regulatory system, it will not only benefit our own economy, it will also help those US exporters who have been complaining about these things for some time. And that is, I think, a win-win landing zone for a deal, between the US and the UK.
We've just seen Donald Trump carve out smartphones to make sure that the cost of those are kept down for the US consumer base. How should we be dealing with a problem like China, Shanker?
Well, I think not as we have so far been dealing with it, and that goes back several decades. I think we have to recognize that the Chinese economy is built on a series of state-owned enterprises, distortions, state-led capitalism that is not compatible with our version of competition-based market economy. And we should be prepared with the US and with others, with the Japanese, with the Australians, with others, to have a robust defense mechanism when we identify those kinds of distortions and their impacts in China. I mean, we're talking now in the UK about, British Steel. Well, the reason we have a real problem in the steel sector in the UK is because we allowed China distortions in the steel sector to run rampant all over the world. It massively increased steel oversupply. We damaged our own industry by making energy costs about 4 times what they are in other countries, and energy is about half the cost of production of steel. But the big problem with steel were the Chinese distortions about which we did nothing. So I think we have to join the US and the Australians and the Japanese and other countries in having a robust approach to and it doesn't mean you decouple from the Chinese economy. It doesn't mean you close down to trade. What it does mean is you send a signal to China that if you're willing to play by the rules, if you're willing to have a competitive market, then we welcome your imports. But if you're going to distort in this fashion, we're going to have a robust defense mechanism against you.
Shanker Singham, thank you very much indeed for joining me this morning.